Good afternoon, everybody. Welcome to another ShareSoc Discovery webinar. Today we're going to introduce you to sound energy and also Oxford technology in a moment. My name's Mike Dennis and I will be your host for today's webinar.
I appreciate everybody taking time this evening to listen to us. It's a long story with sound energy. I took over 5 years ago, and we are here now fueling the energy transition, primarily in Morocco. And I think we're very well focused in delivering that. Later this year, we expect our first revenue. Morocco is moving its energy through from the traditional coal-fired power through to renewable energy. They're very advanced on their strategy for doing that. And gas, unlike the UK, is at the centre of that energy transition. And sound is excellently positioned to deliver that. So we're going to be providing the first set of gas to the country from this area later this year, Q4 this year. We have a second project from the same gas field, which is fully funded, and so we don't have to raise equity to deliver that, and that will be delivering gas into a pipeline into the power stations in about 2-3 years' time. We've got a couple of exploration wells. And for retail shareholders, that's an attractive opportunity for us, funded as well. So we're not looking for money to drill those 2 exploration wells. And then we've expanded our business more broadly in Morocco. We're playing to our strengths, our shareholder relationships in Morocco. We have a good share register with 2 significant Moroccan investment vehicles. And we have expanded into the renewable energy, the solar energy, but through access to the transmission grid. So I'll explain a little bit about that. And we're also, and some of you may have read the Daily Telegraph today, we've got an article about the natural hydrogen exploration, and we believe Morocco is ideally positioned for that. So after 5 years of quite hard, detailed work, we're on the cusp of receiving all the rewards with revenue, funded developments, exciting new exposures into the solar energy world and into the hydrogen world. So if I can have the next slide, please. I think the main thing that differentiates Morocco to other African countries and certainly against Europe, its growth is a consistent 4% per annum. And to get that growth, you need energy. And Morocco's been playing a very strong part through its national energy strategy that it put in place over 15 years ago to deliver the right type of energy, renewable, clean, moving away from coal, as I mentioned. So these are important things. Sound has positioned itself. It's involved in the largest concession and the largest exploration acreage in Morocco, onshore Morocco. We've got a 25-year concession, and we have gas sales contracts all lined up, take or pay gas sales contracts. And it's quite an attractive place to work in Morocco. Because of the paucity of hydrocarbons, there's an incentive for energy companies to work in Morocco. And so there is a tax holiday for 10 years from first production. So no corporate tax for 10 years. And there's a small royalty that you pay for producing your gas. However, that doesn't kick in until quite a substantial volume of gas has been produced. So an attractive fiscal regime to work in Morocco. We have a discovery, which I'll briefly talk about, in the east of Morocco. The Tendrara development onshore we break down into two different markets. One market is the industrial market, and we'll be selling liquefied natural gas, and that will be starting commissioning and producing later this year with our first revenues Q4. And then the second one is gas into the power market. So the power stations in Morocco, large amount of them are coal-fired. We are working with 2 gas-fired power stations, and so we're able to provide gas into that. So these are good. good developments. And what it has meant is that now, after the 5 years of hard work, we've transitioned the company from a pure exploration company into a exploration, development and production revenue generating company. I mentioned we've got strong local shareholders on our share register. We have the Oil and Gas Investment Fund of Morocco, and we have Africa Gas, two big organizations in Morocco. And we have very strong relationships with the government and its agencies. So, for instance, last week I was with the ministry discussing matters. We've got these two exploration wells, and there'll be a nice picture about that to get everybody excited. Getting those wells drilled is game changing if there's success. So it was game changing several years ago when Sound made the discoveries and the developments of the Tendrara gas field, and we've got more gas to come. So revenue coming, funded developments, exploration, and then the move into renewable energy and also clean hydrogen energy. I think we're now seeing an uptick, and we're expecting significant value growth in the company's share price. If you can go to the next slide, it'll be helpful. The Tendrara development out on the east of the country, on 25 kilometers odd from the Algerian border. We have partnered with a very strong local headquartered company called Mana Energy. It's part of the Managem Group, which is an Pan-African mining company, and it has taken as a third leg of its business gas business and energy business. And therefore, last year we sold a chunk of our business to Mana Energy, and they are the operator. They own 55% of the concession. We own 20%, and we have the state at 25%. We have Africa Gas, who is not only a shareholder in Sound Energy and provided some debt to the company, but they are also the off-taker of the LNG, and they provide the market. So we will be selling our LNG at the site to Africa Gas. They will truck it 600, 700, 800 kilometers to the western seaboard, the Atlantic seaboard of Morocco, where the lighter industries, the ceramic industries, will be buying this LNG. The other point on the left-hand side for the technical people around us, you can see we have contracted at the moment just over 170, 180 BCF of gas. We have what we call a 1C, 1P gas development of 197 billion cubic foot, and that's almost half of the 2C. So we've got a lot of uncontracted gas to sell. Whilst our two contracts at the moment are they're limited, the cap and collar on the gas. Any additional gas we sell, once the infrastructure is in place, we can sell at a spot price if we want to. And the good thing about this is, look at the location of Tendrara. We're about 120 kilometers south of the main trunk line, the big trunk line, the gas line that comes across from Algeria, across north of Morocco and up into Spain. It actually crosses the Strait of Gibraltar and goes into Spain. That gas pipeline is empty. Algeria does not produce any gas for Moroccan consumption, so we are excellently located to tap into that pipeline, and there's two power stations on that pipeline, both needing the gas. So we have gas sales contracts with the owners of that pipeline. So if we can go to the next slide, we can see what's actually physically happening on site. So here we are at Tendrara. I was out there a few months ago, and it's actually progressed even further than this. All the kit has come to site. On the bottom right-hand corner, you can see one of our wells. We opened that up just recently to make sure it flows nicely and completed it, which it does. So they're now two wells safely secured and ready for production when the facilities are available. On the top left-hand side, that tall square, oblong, rectangular block is the Micro LNG liquefaction plant, manufactured by one of the top manufacturers in the world. What you can see is our Christmas trees, our amine unit, the power packs, and the bottom left-hand side is the main LNG storage tank, which is quite a considerable piece of engineering, and that isn't going to move anywhere. So it's got about a 20-meter depth of concrete underneath it. So we've got everything in place. Mana Energy converted the contract that we had into an engineering procure construct contract. we've got very good project management now with Mana Energy, and I've every confidence in them that they'll be commissioning, producing, and selling gas by the end of the year. Can we go into the next slide, please? So why did we get into this area at the beginning? Well, there's a lot of exploration potential. There's a lot of gas in this area, multiple trillions of cubic feet of gas. What it needed was an unlocking of technology to produce that gas. And Sound was able to drill a well, first of all, horizontally, and then fracture it and produce good volumes, and then a horizontal well and fractured that well. So we could get considerable volumes from wells that in the past people thought were not able to flow. So it was the use of new technology in a remote location that unlocked the value in these licenses. So you can see right in the center with that red dot is where it says T5 Horst. That is our concession, but you can see the massive acreage, 28,000 square kilometers of acreage around it. All these prospects and leads, the purple colors, are ready for appraisal, drilling, exploration. Some are more mature than others. So we have two discoveries on the Grand Tendrara license, one called SBK1 and one called T4. They were both drilled a long, long time ago, not using the modern technologies. But SBK1, for instance, it tested 4 million cubic foot a day, which if you've got infrastructure in the area, which we will be bringing, will be a commercial well. So what we're going to do is re-drill a little bit further on that structure, horizontally or vertically, and fracture it. And we will expect a well in the concession to be a multiple of 3 or 4 times. So if it's 4 million with a vertical well without any stimulation, it'll be 16 million with stimulation and a horizontal well. So we're very attractive about that. And then the M5 well, which is on the Anawal license, that is a pure wildcat. That means, the area hasn't been proved up yet for gas. We think geologically it's there, seismically we can see the structures, but there's nothing better than proving by drilling it. 2 wells will be paid for by Mana Energy, and we have a commitment from them to drill those wells in the near future. So we're very keen and we're very excited to get involved in that. The M5 well potentially is 3 or 4 times bigger than the development that we've got at the moment. So if that was successful, and it's probably about I think, what did we say, 20% chance of success, something like that. If that well comes in, then it's a massive boost to Sound and the development and the need for Moroccan's energy. Next slide, please. So building on our sense of our strengths in Morocco and our ability to develop a fueling the energy transition company, we're playing to our strengths in Morocco. Morocco, if you're going to do solar energy, you tick the box. The first box has to say, is it sunny? Yes, sunny occasionally in the UK. In Morocco, it's sunny 330 days a year. It's also windy, so you can use wind power as well. But we are not coming into the opportunity to do solar through like a me too, I want to put a few rooftop solar panels on. We are working with the ministries, working with the regional authorities as they liberalize their transmission grid. So it's more about accessing the grid and the market and then providing a cheaper form of energy into that grid than currently the end user gets through the coal-fired power stations from the state. So it's a liberalization of the market. We want to be an early mover on that. So we're not the first, but we're going to be a fast follower. We've identified 17 different sites. We've been negotiating with off-takers of the energy, and there's going to be in total around about 250, 270 megawatts over the next 4 years. We've partnered up with a company called Gaia Energy, which is a well-known and very competent African development company of renewable energy. They've developed gigawatts of power throughout Africa. They want to partner with Sound because they would like to move more, in our terminology, upstream. They would like to own the assets as well. We like them because they're a strong Moroccan headquartered company with a lot of expertise in renewable energy, but we can bring the relationships, the governments, and the access to the grid, etc. So we're very pleased to be partnering with Gaia Energy. And secondly, this is a multiple stages of projects. Maybe 15 odd projects that we'll be developing over the next 3-4 years, and each one of those from start to finish. Maybe 9 months, and each one of those will be generating revenue within 9 months. So once we've completed all our agreements, which we're hoping to have ready after the summer, September this year, we can start the investments needed to. It's a traditional technology. It's a solar panel, photovoltaic cells, but it's accessing the grid that's the unlocking, the enabler. So there'll be some approvals that we need to get in place. So let's say we kick off our first project early next year. We'll have revenue late next year. So that coupled with the gas revenue, our own solar revenue, and then the revenue we would have expected from our second phase in the gas project, that's equivalent to the revenue we're expecting to see from the solar project. So these are not too shabby projects to get involved in. The buyers like renewable energy. They like green proof that they've created their products using green energy, because as they export to particularly Europe, where they want to avoid carbon tax. So by saying that their product and their produce is manufactured using green energy is a big positive. So another growth of Sound, playing to its strengths in Morocco, playing to its relationships, playing to its strong shareholders, but keeping in the energy delivery business. Next one, please. Now, this one, for those of you who read the Daily Telegraph today, we got quoted quite nicely. This is about, and this is more a medium-term project. This is pure natural hydrogen. So this isn't green hydrogen, which is very expensive and has to have lots of massive solar or wind systems with electrolysis machines that don't really exist. This is in situ hydrogen. And we, again, have played to our strength in Morocco, but with one of the world's leaders, a company which you can see on AIM as well, called GTEC. They have a fantastic technology database. They were spun out of Leeds University many years ago. We have regional knowledge, we have operational knowledge in Morocco, we have licensing knowledge, but what GTEC has is a big database. It's a geoscience intelligence. So it's a combination of human intelligence, geophysical information, geological information, basin knowledge, gravity, magnetics, but also the machine learning that they have with their expertise, their workflow paths. So my lights have just gone off in the room, so hopefully you can still see me. Energy saving. So what we found is by mapping geologically, geographically, and using the AI technology of geotech, we've identified some considerable opportunities in natural hydrogen. And there's multiple uses of natural hydrogen, but what we're doing is we're combining our engineering, commercial knowledge in Morocco and looking to form ourselves some licenses in Morocco that we'll study over the next year or two and potentially lead to funding an exploration well towards three years' time, something like that. Now, there's a strong market. We can use hydrogen in all sorts of forms. It's not just pure gas. It could even be sold into the pipeline I've just showed you, provided you keep it, the dilution of the pure hydrogen into the hydrocarbon stream is less than a certain percentage because of the steel manufactured. Same problem we have in the UK, why we won't see hydrogen in the grid, the national grid in the UK. So yeah, we as Sound Energy, I think, are expanding, playing to our strengths, working with very good partners, whether it's Gaia Energy on the solar and the electricity generation, whether it's GTEC on the exploration, geological databasing, and our technology. We work with GTEC is quite proprietary, so it's not like other people's, and we really do think we've got a bit of a leading edge on that. We're partnering with Mana Energy, a very strong multi-billion-dollar company in Africa, who are leading the development of the Tendrara. We're partnered with Africa Gas, who are off-taking the gas. We're partnered with ONEE, the state power producer. So, we're embedded in Morocco and we're growing Morocco. And I think we want to be the British poster boy success story in Morocco. And from the recent British-Moroccan relationships, David Lammy was down there. We've signed agreements, the British government and the Moroccan government. So we are poised to be a British success story in Morocco. So that's a very quick snapshot. And I want to leave a few minutes for questions. Can you put the next slide on, please, Palmina? If there, I think it just says questions. Yeah. So there you go. And if you ever come to our shareholder event that we hold in the office, you're most welcome to come and meet us.
Thank you, Graham. That was a good trip through. Gives a good feel for the what Sound Energy are all about. I've got one question here that came in prior to the webinar, so I'll start with that one. But can anybody else who has questions, please type away now. Don't miss the opportunity to ask Graham a question. How does Sound Energy intend to pay back its debt?
Very good question. Yeah, no, it's a very good question. And I think it's fair to say that our share price, unlike the last 2 days, where I think we're up 15–20%, I think the feeling is that our share price was being dragged down because there's this overhanging debt position. And it's not overhanging. We've got 2 sets of debt. We've got an Africa Gas loan note, which is of $18 million. And that we start paying the principal back on that in 2028, and it matures over a 6-year period. So we're very comfortable we can service that, and that's not an issue from our cash flows. The one that I think is in everybody's mind is we have a Euro bond. That is a 25.3 million euro facility, which we currently pay 2% interest on, which the bondholders are happy to receive every year, the 2%, and there's 3% rolled up interest. So that is due December 2027. And of course, since we've now reduced our position from 75% of the business to 20%, our revenue stream is going to be much lower. We have a very good relationship with our bondholders. In my time in Sound, in 5 years, we've rescheduled that debt twice. Unlike other AIM-listed companies that have struggled, where bondholders want to take the company over, dilute them to hell, or even just wind the company up, we have supported bondholders that generally are happy with the way we're going about managing this business and how we're transitioning it. So look, if we can't afford to pay it in December 2027 because we can't pay it all, we will come to a solution with the bondholders, and we'll kick it down the road a little bit. Now, they of course they're going to argue about it and want something for it, but we're working hard to improve our balance sheet and restructure some of that bond debt. So yes, it's very much a focus. We have hopefully a new CFO joining us in a month or so's time, and we will be let's say laying out the plans for rescheduling that debt as the time nears. But at the moment, the bondholders are comfortable. They know we service the debt. They know where we are. They like our development plan. They like the idea that we've got the solar revenue coming in from 2026 onwards as well, 2027. They like the fact that the Micro LNG is finally coming to production. And they like the fact that we've got Mana Energy as a very strong partner who've put more money into the project and are funding us on the exploration. So, there's many ways of managing this debt. And we've got, we're not sitting there on our backsides doing nothing, but we know that we've got another 18 months or so to sort that all out.
So at this stage, though, you're saying you will inevitably have to reschedule. There's no way you will be paying that to the present terms, or are you saying that will depend on how things go over the next few months in terms of the revenue ramp up?
Yeah, there's all sorts of opportunities, and as you can see, we moved into the solar and we moved into the hydrogen. We have a pipeline of business development opportunities that we're working on right now. Some of those may involve current production. Without giving the game away, all I'm trying to say is, in the past, we've never had a problem with the bondholders. They like us, they work with us. They're not fighting us, and
Yeah.
we will either pay it, we'll sort it out, we'll restructure it, we'll do something. So it's very much on our agenda.
Okay, thank you. Okay, we have some other questions have come in. Robert wants to know, how can you tell the difference between hydrogen reservoirs from hydrocarbon gas reservoirs on seismic? Question mark.
On seismic, yeah. Well, that's an interesting question, Robert, and you're probably more of a geologist than I am, and I don't have my geologist with me. It's not just seismic, all right? The seismic shows the trap. Okay, we can get from the seismic the trap, so it's not like we're seeing bright spots and things like that. What we're trying to do, and what we do with GTEC, and that's why the basin modeling, the magnetic data, and the mining and mineral data, there's about 3-4 different ways that natural hydrogen can form, and generally it means splitting the water atoms in situ somehow. And it can be by decaying, something to do with iron, redox type approach. It can be done with uranium, sort of more radioactive approach. It can actually be biogenic as well. So no, the answer, Robert, is you can't differentiate. You can just get the trap really more from the seismic. And if that's not exactly the right answer, I'll give our VP Geoscience, who was quoted in the Telegraph today, John Argent, to put a more comprehensive written
more detailed review. Okay, thanks for that one. John wants to know, says the increase in the share price today is because retail investors were assuming you would announce a drilling program today. You did say on the previous 2 presentations that you would be drilling by September, which will now be another missed timeline unless you get your skates on, exclamation mark. The SP will drift back down now until you drill, baby, drill. Is there another delay in the offing there?
So look, we're not the operator, and in fact, I was with the operator this morning having a chat exactly about this topic, and we are working tirelessly to persuade them to start drilling as soon as we can. I actually didn't say September 2025, but we under the sale and purchase agreement we have with Managem, there is a time frame, and I think what we've said is, until the licenses are perfected, we can't actually drill. And at the moment, and that's another reason I was with the ministry last week, the licenses are in the extension phase and the renewal phase, and that hasn't come about yet. So until we get that, so look, it's high on our agenda. I don't know. Did the share price go up because we announced in the Telegraph we're looking at natural hydrogen? Who knows what the.
Who knows?
I also know, but I think one point, Mike, I also know that we did have a big overhang with one shareholder who is exiting. They've gone now, so they're out of the company, and therefore we only need liquidity is not very good, so we only need a few buyers in the market to make the share price move. So John, I know we're not going to be drilling in September. As you quite rightly said, that's only 2 months away, unless the NOL license gets approved and it's all perfected, and then the 101 rig from Star Valley can be done. But realistically, we're not going to be drilling in September.
Okay, thank you. Breeder wants to know if PRD hit big gas, how this would impact you.
Okay, so Predator is the PRD, Mike, in case you're familiar. They've announced they're going in testing, I think. So good luck to them. Morocco needs the gas. It's in fact really good news, because it proves that there's more and more gas in the area. We would like to see Predator be successful. We know they've worked very, very hard in Morocco, and they know the geology very, very well. So yeah, good luck to them. My understanding is they've got a loose relationship with Africa Gas as well, which is one of our shareholders, and will be lifting our gas. So I think they can probably monetize because they're closer to the market. I think if I understand correctly, and forgive me if I'm wrong, but Predator are looking at compressed natural gas as a way of moving the gas from the field to the market.
Right.
That's great. I've used natural gas somewhere else. So no, it's good news. I really hope they are successful because Morocco needs a bit of success.
Okay, thank you. And in terms of the pricing agreement with Africa, how is the LNG priced in that relationship? Is it a fixed price for forever, or is it based on some market pricing? Or
there's a cap and collar. There's a certain volume. We have a very comprehensive gas sales agreement, which talks about minimum. It's a take or pay contract. So if Africa don't want to actually physically take it, they still have to pay us, and we store it. That's why the storage tank's so big. It probably gives us something like 14 days of storage. There is a cap and there is a collar, and the collar is around about $8.25. There's an inflation link in there. The T0 price was around about 650, 670, but because of escalation in the last 3 years, we're up in the $8. So I think we'll be selling gas over $8 at the well site. Don't forget, and therefore Africa will have to pay for the transportation, the trucks, the storage at their customer's site, the regasification. So if we sell gas to them, just use a number $8, they probably have a couple of dollars, if not $3 costs that they still have to incorporate into their gas price. So they were selling gas at maybe $11, $12, $13. Whereas if the current customer buys imported liquefied petroleum gas, different type of gas, they'll be paying $15 to $18 for it. So there's a win for Africa, there's a win for us. And what we wanted to do, because of the history, we wanted to lock in a 10-year profit by setting a volume of gas that we will sell at a certain price, knowing what our costs are. So we've locked in essentially the profit on the project. And why I made the point earlier on, we have a large amount of uncontracted gas that we will sell more on spot contracts into the pipeline. Should Morocco be full of gas, we can even sell it into Europe, but it's unlikely we'll sell it into Europe because Morocco pays a good price for the gas. Why sell it to Europe when we can sell it to people in Morocco?
Okay, thanks, Graham. Well, that's it. We're done. We're all out of questions, and it's perfect timing. So that's half an hour. So thank you very much. I hear you've got to rush off now, so you're not going to be around to listen to Lucius, which is fine.
I'll catch up with Lucius's presentation later.
Yeah.
Thank you very much.
Okay. All right. Thanks. Bye for now. Right, next up we have Lucius from Oxford Technology. Lucius, welcome. I don't think you've done a presentation to our members before, so or if you have, it was maybe a while ago.
I haven't.
So welcome to a ShareSoc Discovery Series webinar. I'll hand over to you. I believe you haven't got any slides, so you're just going to chat away. So for those listening and watching, if you want to bang in questions in the Q&A system as we go through, Lucius is quite happy to handle things, stop and handle things as we go through, and we'll be sort of guided by where the direction of the questions to some degree, I guess. So anyway, welcome, Lucius, over to you.
Very good. Okay, so Oxford Technology invests in new science projects, and we do so at the very earliest stage. So a typical investment for us is £50,000 or £75,000 in a PhD in a lab, and the scientists concerned will be doing something interesting. And so that's what we do. And we've done it for a long time, since 1983. And I'll start off by giving you some background about myself and how I got into this. And if, as we go through, you want to interrupt and ask questions, please do so. But I am an engineer by training, So after school, I did an engineering apprenticeship at the Atomic Energy Research Establishment at Harwell. And then I went to Oxford to read engineering. And I was meant after Oxford to go back and do another year's worth of apprenticeship. And they were paying me to do this. But I changed my mind then. I thought that England is very good at engineering and ideas and science in general, but what we're not good at is creating businesses out of that science. And so I went to see my apprentice masters and I said, listen, I think this would be a mistake for for my time and also for your money, because they were paying me to make me a even better or a better engineer. And what I'd like to do is to learn something about business. And they said, all right, well, if you can get into a business school, we will release you from your indentures. So then I went to Harvard Business School, and when I went there, I thought there was some mystery to business, and I wanted to sort of try to find out what it was. And what I discovered is that there is no mystery to business. It's really all common sense. A business needs to produce good products. It needs to keep them up to date. It needs to finance them. It needs to market them well. It needs to keep its staff happy and motivated. It needs to look after its finances and so on. Not that any of these things are easy to do, but at least what you're trying to do is very easy and very common sense. And when I came back from Harvard, I wrote a letter to Mr. Hanson, as he was then, later Lord Hanson. And I said, dear Mr. Hanson, I think you've got a very good management style, and I think you're going to be very successful. And I'd like to come and work for you. And I don't care what you pay me, but I want to be in charge of something. The one thing I thought I knew about myself was that I'm a natural doer and not an advisor. And anyway, so Hanson said, oh, you're just the chap for me, you're hired. And he then sent me down to the agricultural division, where I reported to the chairman of that division. And it was a complete disaster. The, the chairman viewed me as a spy from head office, and I had no authority to carry anything out. And so after about 9 months, I rang up Hanson. I said, look, can I come and see you in London? And he said, that's fine. So I went up to see him. And I said, look, this isn't working at all. I said, either the divisional chairman must go and I'll run the division, or I'd better go. And he said, well, I think you'd better go. So that was the end of my first, and as it turned out, only job. So I then thought, well, I seem to be unemployable. I'd better try and start my own business. And I didn't have any money because I'd borrowed money to pay for my education. And so I had a student loan. And I also didn't have an idea. And I thought, I didn't think I'd be able to raise enough money to start an engineering business, which is what I really would have liked to have done. So I conceived this slightly unlikely idea of starting an American hamburger restaurant. And the big advantage of restaurants is that you don't need too much money to start. You can rent premises and so on. And as soon as you open your doors, you get paid in cash. And you don't have to pay the butcher for 6 weeks or whatever you can get away with. And nevertheless, you do need some money. So I wrote a business plan, and I reckoned I needed £27,000 to start this business. So at that point, I was the archetypal young entrepreneur. I had a business plan in one hand and needing £27,000 to start, was equivalent to about £250,000 today. And I didn't have any money to contribute myself. So my problem was how to raise the money. So the first thing I did was to go and see my bank, and they very decently really offered to increase my overdraft from 3,000 to 4,000 so that I had something to contribute to this. And this was 1971. And there were only 2 venture capital companies in the UK at that time, ICFC, which is now called 3i, and the Small Business Capital Fund, now defunct. So I went to see both of them, and they both turned me down after 20-minute meetings on the grounds that I was too young and no experience and blah, blah, blah. So I then put an advertisement in the Financial Times, and the advertisement, which was a tiny little advertisement at the bottom of the page, and it said, entrepreneur seeks £26,000 to start business. That was the £27,000 I needed, less the £1,000 that the bank was going to lend me. Estimated value after 66 months, £237,500. Please write box number. And the idea of putting that rather precise number was to convey the idea that there was a plan. And so I had 16 replies to that advertisement, of whom 6 were trying to sell me more advertising. But the 10 people who answered it were individuals who today would be called business angels, although the term did not then exist. So I sent the 10 my plan, and then the first person rang me up and said, oh, this looks interesting, let's have lunch in a pub. So I went to have lunch with him in a pub, and it was in the summer, and it was a very unsatisfactory meeting. We fetched our drinks and we talked a bit about the cricket, and then we talked a little bit about the business, and there was somebody else there, a friend of his, who wasn't interested, and so that the whole meeting just didn't feel at all right. And so at 4 o'clock in the afternoon, I rang him up and I said, look, that didn't go at all well, and I'm sure you're not going to invest in me. And he said, you're quite right, I'm just writing you a letter. And I said, but can I come and see you again and do it properly? And he said, all right, come to breakfast. So a couple of days later, I turned up at his house and we had breakfast and we talked about the business for 3 hours. And at the end of that time, he offered to invest £5,000 in the business on the terms I was suggesting. And the terms I was suggesting were that I would put in my £1,000 that the bank were lending me for shares, and the investors would put in £999 for shares, so I would control the business. And then the investors would make a loan to the business of £25,000, secured against the assets of the business, but not guaranteed by me. And the effect of that structure was that if the business failed, I would lose £1,000, which would have been painful but not life-threatening, and the investors would lose £26,000. If the business went well, then the first profits would be used to repay the investors nearly all the money they'd invested, and after that we'd split the profits 50-50. And that seemed like a fair deal to me, and it clearly seemed like a fair deal to this investor, since he offered to invest on those terms. And I didn't know that then, but I certainly know it now. That is called having a lead investor. And once you've got a lead investor who has agreed to invest in the business, not because they're your father or your friend or something, but purely because they think it's a good commercial proposition, everything gets real and it gets much easier. And that's exactly what happened in this case. So once I got one investor signed up on agreed terms, I contacted the other people who'd got in touch with me and said, we now, the train is leaving the station. If you want to get on board, now's the time. And quite quickly, I was oversubscribed. I had more people wanting to invest than I had space for. So I took the 4 largest, 2 for 8,000 and 2 for 5,000, and my 1,000 made a 27,000, and it could start the business. I then had to find a site, and the site was in Bristol. I didn't know anybody at all in Bristol, so I had to move to a strange city, and took over a old restaurant, which I then converted. I did everything myself. I scrubbed the floor and waited at the table and cooked the food, and it was open 7 days a week, 14 hours a day, so it was very hard work. But it was actually very difficult to start. I had to give away 10,000 free meals to get people to come because nobody knew what a hamburger was in those days. It was before McDonald's had come. And anyway, every 100 people who came, 50 liked it or whatever it is and came back. So after a bit, the business was going well, and there was enough money in the bank to open the second restaurant. And then the second restaurant went very well. And so after 5 years, I had 3 restaurants in the chain. And by this time, each restaurant had its own manager. And so I had time and income. And so then looking back at the difficulty I had raising capital, it seemed to me that the whole mechanism for raising capital for startup business in the UK was very inadequate. So I decided to try to do something about that. So I thought I'd start this magazine called Venture Capital Report. And the idea of that was that we would write articles. So instead of my tiny little ad, there would be 5 or 6 page articles with a description of the product and the service, an analysis of the market and the competition, CVs of the founders with photographs, a cash flow projection, a suggested equity structure, and a name and address and telephone number. And we would sell that on subscription to investors. And so that's what I tell you lots of stories. I think I won't. We haven't got that much time.
Yeah, you haven't got that much time left, Lucius. So you've got the opportunity to tell us. Bring us forward to the present day.
Yeah, I will.
We're nearly 15 minutes.
I'm nearly there. So so Venture Capital Report, I had it was very difficult to start, but I had quite a stroke of luck because the first issue was December 78, and Mrs. Thatcher was elected in April 79, and she was on the same tack that I was on. She was trying to make England a more enterprising place where people could raise capital. And so the Cabinet Office subscribed, and she used to invite me to Downing Street to meet her chancellors. And she would say, now you listen to this man, meaning me, and I would tell her chancellors the difficulties that there were on the ground of actually doing stuff. And so that led to various government schemes, the business startup scheme and the business expansion scheme and the loan guarantee scheme and various things to make it better. Anyway, after 5 years, so by 1983, it had become clear that when we wrote up ordinary businesses, quotes unquotes, in Venture Capital Report, think, hotel developments or squash courts or fashion designers or restaurants or something, they would get inquiries and quite often raise their money. When we wrote up a science idea, they didn't even get any inquiries, let alone any money. And the reason for that, when I thought about it, was very obvious, that most investors don't understand science. People don't like to invest in what they don't understand, so nothing happens. So then, and my background is science and engineering, so I was particularly keen to help those kind of people. So then in 1983, I was bleating on to a venture capital company in the UK, and I was saying, it's no wonder this country is going to the dogs. You useless VCs, you put your money in asset-backed businesses or management buyouts and already profitable companies. But whenever anybody comes up with a real idea, you will run a mile. And they said, well, I tell you what, they said, if we give you £125,000, would you like to do 5 of these things yourself? And shut up. So I said, okay, you're on. And so that was the beginning of what I've done ever since. And luckily for me, my first investment was a huge success. And the investors got back £500,000 for their £25,000 investment quite quickly. And the founder became a multimillionaire, and he became my biggest investor. So that then enabled us to go forward and have lots of funds. And then this wonderful thing happened in 2012, which was that the SEIS scheme was introduced. And that is absolutely perfect for what we do. I expect you all know about it, but I mean, it is so generous. When it was first announced, I could not believe it. I heard it on the radio, and I rang up the people in the Treasury, and I said, look, can I come and see you? I went to see them, and I went through all the numbers. And in those days, it's changed a bit now, but in those days, if you invested £100,000 and the business failed, you actually ended up with £100,500. You made a profit if the business failed. And if the business went well, all the gains are tax-free. And And they said, yes, well, the reason is that George Osborne, who's the Chancellor, has decided that the UK economy is in a mess. And this is 2012 after the financial crash. And he said, and what we need is more startup businesses. That's what creates the jobs and the employment and the growth. And investors just don't do startups because they're too risky. So the SEIS scheme is going to change the culture, and it has. It has transformed, entrepreneurs and early stage people really can raise the money now they need to get started. And the gains, well, we've been going since 2012. I think you've been sent a report, which we produce a quarterly report, which has a page of information on every single one of the investments we've made since 2012. It's very transparent. It includes a table of all the failures and the losses that have been made on those, and also a table of the gains. And the gains greatly outweigh the losses. But, and this is the one disadvantage of investing in early stage things, they mostly are illiquid. You cannot get your money out until there is an exit. And exits do happen, and when they happen, they can be extremely profitable. And I can give you one example. We've had one really good success, and it was a very typical investment for us. Though we went to there was a presentation and lots of investors listening, and this company was looking for £50,000 to start, and nobody was interested, but we were, and we invested. And the £50,000 was to do a chemical experiment, specifically to change the affinity of a particular protein called CD200. And it was thought that if that could work, then this could be a possible treatment for rheumatoid arthritis and other diseases. So we invested our £50,000, and then the experiment was successful. Then we invested a bit more, and about £1.5 million came in from others. And then a few years later, the business was sold for a headline figure of $400 million, 30 million up front, and then milestone payments. And my own personal investment through the fund was £4,000 in this company. And after the tax relief, which you get back in the year one, my net investment was £2,300. I've so far received back £43,000 in cash. And if the milestones are all paid, and so far they're on track to be paid, but I'll get £788,000 in total back from that £2,000 net investment. So the gains can be huge, and they are all tax-free. So,
is that one in your booklet then, Lucius?
Yes, it is.
Yes, it is. Yeah. Okay.
Yes, it is. Yeah, it's called Ducentis. Oh, yeah.
Over the just as a matter of interest, over the whole period, how long does it take from initial investment, typically on average, to before there is some kind of exit?
A very long time. I mean, I've just had another exit from an earlier fund, and we invested in 2005, I think. And we've just had
exited, so 20 years.
20 years, exactly.
Yeah.
Exactly. It can be a very long time.
Yeah.
But yes, anyway, that is the downside.
The potential downside, yes. I'm beginning to think I'm already too old.
Well, the other thing to say is there's a recent budget change, which I think may have a significant effect, which is that the SEIS and EIS investments are outside inheritance tax. So if you've got assets in a pension fund in quoted companies, they are going to be taxed at full rate. And then when your heirs inherit that, I'm not a tax expert at all, but I think they also get taxed on the receipts. So it gets double taxed. If the SEIS stuff is all tax-free and it's outside your inheritance, your estate, so you can pass it directly to heirs.
Right.
And all the gains up to that point are tax-free. So I think it makes good sense from tax planning point of view. But not at all what we think about. We spend our time. Maybe one other thing, important thing to say about what we do is that we get actively involved with the companies in which we invest. You know, the scientists in whom we invest may be Nobel laureate prize winners, but they won't have seen a VAT return or negotiated a deal with an American distributor or all the sort of 101 things that you have to do when you're starting a new business. So we typically have short meetings. We don't like to have blockbuster board meetings. What we prefer is to have a 10-minute conversation every fortnight or something, and discuss any issues as and when they arise. And with a bit of luck, if we can't solve the issue ourselves, we frequently know somebody who can, because we've been doing this for a long time.
Now, did I see somewhere that you've got some new type of funds that you're putting together now that you roll over every year or something? I can't quite remember the details now.
No, this is the paperwork associated with making SEIS and EIS investments is slightly cumbersome. We do it all ourselves for our investors, and we send investors a form, an SEIS form and an EIS form for each investment, and they can then claim the money back against their income tax. But the Inland Revenue just launched this thing called a knowledge intensive fund. And so we've raised the first one of those in March, and we'll raise one every quarter. So the one in March is closed. The one in June is closed. The next one will close in the end of September.
Right. Okay.
Investors who invest in that will get a portfolio of 5 EIS investments in knowledge-intensive companies chosen from our portfolio, which is about 50 things, and we know them very well. So we're in a good position to judge which ones are worth backing. And then they will get those investments within a few months, although you're allowed, according to the rules, to take 2 years to make those investments, but we know exactly what we want to do. And then you get a single form, it's called an EIS 5 form, and you send that in and you get your full tax relief with a single form. And then you also, you get the report, which will tell you how many shares you own. And we do a quarterly valuation. Everybody invests get a quarterly valuation of all the companies in which they've invested.
Okay. And what are typically the charges on the way into one of those funds in terms of a percentage?
No charge. The way we're going to do it, if you invest £100,000 in the fund, you will receive £30,000 of tax relief, and we won't charge any fees. What we are doing, and what we have now done for the first one, we're charging the companies 5%. So you will invest at a slightly higher share price, 5% more than whatever the current share price is, and then the company will use that money to pay us a 5% fee, which will then, that's the total fee. And in exchange for that, we monitor and help the company over the next 5 or whatever many years it is until it exits. So it's very administratively simple. Was that clear?
I think so, but so you're adding 5% to the NAV of the underlying company, and then
yes. So the investor will be charged no fees. Normally, in our current fund, we charge 2% a year for the first 3 years.
Yeah.
And then more after that. So there'll be none of that. There's no ongoing fee, and you won't pay any fee at all. The investor won't. But what the investor will do is pay 5% increase on the current
on the share price
pay a
at the
slightly
time.
larger share price.
Okay.
And no
And
cash.
no ongoing charges.
No ongoing charges. And yes, that's right.
Okay. So that's this knowledge intensive one started last year, did it? Is that
yes, it was announced by the Inland Revenue, I think in January or something. Anyway, so it's absolutely perfect for what we do. So the first fund we closed was we'll do it every quarter. So the last day of quarter 1, which is at the end of the tax year, that was our first fund. And then we call it OTKI Q2 25. That was the one that closed on the 30th of June. And then the next one will be OTKI Q3 25. And we will open that for investment in September, and it will close at the end of September. Yeah.
And if people want to look at the overall performance in the portfolio over the last 20, 30 years, that's in that, is that in the document you issued to us?
Yes. Well,
recently?
only that is the since 2012.
Since 2012, sorry.
So it's
Yeah.
all yes,
It's all in there.
we've got a whole lot of funds before that, including 4 VCTs which have not done well. And
Okay.
you know, there are 2 companies in there, one called Aracor and one called Scancell, both of which were one-man businesses when we invested. Now they're both quoted on AIM. They've both got drugs in trials, and you know, they could yet be very successful. Aracor
Okay.
in particular, I think, is enormously undervalued. So if anybody would like to send me an email, I will explain to you why I think an investment in Aracor is a very good bet.
Okay. All right. Well, thank you for that. We've got no questions coming in.
No
You haven't
question.
piqued people's interest, I'm afraid.
All right.
So nil point on the question front,
Okay,
but
right.
you'd be sorry to hear. But thank you very much for your
All.
story of your origins. I'll keep an eye out. Are those burger bars still operating as just under another name these days?
The which?
The burger bars that you set up in Bristol, they still
Oh, the
operating?
burger bars. Oh, sorry. No, I think not.
Oh,
I
right.
think
Okay.
they've
Closed a long time. Or taken over by McDonald's, no
actually one of them
doubt.
maybe. I'm honestly not quite sure. Anyway,
Okay.
I know
All
that.
right. Well,
Yeah,
well, thanks very much for coming and joining us today, Lucius,
very
and
good.
making us aware of what's happening in
Yep.
Oxford technology world. And I'm sure people will look it up with interest now that they've heard your story. Oh, we have got a couple of thanks for Edward says, thanks for the presentation, very interesting. Are there other funds using SEIS schemes out there?
Yes, there are.
Oh, there are. Yes,
Yes,
there is. There are other brands that are available.
Yes, there are.
Yes.
And there are some which will give you better tax relief too, because they invest all in year 1. And what our strategy is, we invest 1/3 of whatever people invest in the first year in SEIS things, and then in the next year, and we have the money in the bank to be able to follow it with EIS investment in year 2, and the same again in year 3. And the reason we do that is that if I've learned nothing else, having been doing this since 1983, I've learned that as an early investor, you must be able to support your early investments with additional capital when it's needed. And if you can't do that, the outcome is nearly always bad for
Right.
first-time investors.
Okay. No, thanks for sharing that with us, Lucius. Okay. Well, we're all out of questions and out of time as well. So, Lucius,
Okay.
thanks for joining us today, and we'll catch up with you again, no doubt, in the not too distant future.
And if you want to send me an email, lucius@oxfordtechnology.com, I'll send you the information about Aracor.
Okay. All right. Thanks,
Cheers.
Lucius.